Hey guys, my name is Anthony. I'm a local realtor. Just making different videos in different stages of the real estate process, right? Today we're going to talk about pretty much the beginning stage, right? Like when you're trying to buy a home, people are scared. They don't know how much their monthly payment's going to be. There's a lot of variables to that, right? A $300,000 house could end up being the same price of a $350,000 house. And it's like, why? Why is this $350,000 house monthly payments the same as this $300,000 house? Or why don't I qualify for this $350,000 house, but I qualify for this house? Like, sometimes it doesn't make sense, and it's a lot of factors that are in the numbers that change that. But one of the biggest numbers is going to be property taxes, right? So we have the Save Our Home Act in 2008, where any homeowner that owns a property automatically their property taxes don't go much higher, right? Like 3% max a year. So because of the homestead law, if you own this property for years, your property taxes only go up a very small amount, not much. So when you want to sell that property, maybe that property tax is $1,000, right? Or let's say $1,200 is the property taxes. That's $100 a month. So when somebody's trying to get a mortgage and the bank sees that property taxes are only $1,200, they're gonna say, oh, the property tax is only $100 a month right now. But once you as a buyer purchase it, the county is gonna have the ability to re-tax you to today's time. So that $1,200 bill could become $4,800 bill, right? So raising you from $100 a month to $300 a month. And if nobody in your bank continue to pay and nobody told you about this increase, because the bank pays your property taxes, you won't really know unless you're looking. They might tell you a year later, oh, we've been under collecting $300, plus we need to start collecting $300 now for the future, and you owe us the $300 from the past. Becomes a big thing where a $300 increase becomes a $500 increase because you got to pay back everything you're backed up on. Biggest problem that happens, just keep your mind on that. Understand that property taxes do go up when you purchase the house. There's laws and rumors going in place now. We don't know what's that going to change. Is it really going to change? Will they get rid of property taxes? I don't know. I don't think so. Maybe will double homestead or triple homestead exemptions happen? That makes more sense, right? A primary homeowner getting higher exemption credits makes more sense because those exemption credits were based on low values, right? And also the dollar amount was worth more. So our dollar amount has decreased. Yes, our tax exemption has stood the same. So now a $100,000 house is worth $300,000 and our tax exemption is still exactly the same. That should be increasing, which hopefully happens soon. So insurance is another problem. A lot of variables in the house. Like if it's a new house, your insurance is going to be cheaper. Great, right? Because liability-wise, they know. But if it's an older house, it's going to be more expensive, right? Depending on the electrical stuff you have in there. And even if you upgraded it, that roof makes a big difference, right? If you have a flat roof, your insurance is going to be higher. So there's a little things based on the age of the home that's going to vary in your insurance. Your insurance could be as cheap as $800-900, right? Depending on it's a condo or a townhouse just, if there's a master association insurance, there's so many variables, but insurance, please keep in mind about that. Property taxes, and then the biggest one of all is the HOA, which is not that big. It's pretty common here in Orlando, but the CDD is something that people don't understand. And the CDD is added to your property tax bill, right? So it's not something you actually pay on a monthly bill. Your tax, it could be about $1,900. It could be $2,500. It's one time a year. It's added to your tax bill. It's pretty much a builder's bond to develop that community, gets passed down to the homeowner, right? And the lifespan of that depends. Don't mark my words on this, but it depends. I've heard of 20 years. I heard of 25 years. But pretty much, you won't be paying that off, right? That's something that will be there and passed on to the next homeowner But CDDs, keep that in mind, because if a property tax bill is already $5,000 If you do have a CDD, that's another $2,000, right? They tell you property taxes is 5, but they're not telling you the CDD is 2. They're supposed to, and they will. They just sneak it in there. And HOA could be like, what, $150 a month, you know, depending what amenities they have and what they have to offer. So keep that in mind. Things what you can avoid, right? Is, you know, depending on the property, depending on the location, because sometimes you can't help certain things depending where you're buying the property at. But HOA, CDD, if you're buying a new community where they offer this, just know that's what you're walking into, right? And that's pretty much what you're going to be paying. Property taxes, file homestead, right? And if it's low, understand that it's going to go up. And if it's high, just understand that you can file for homestead exemptions, and we're hoping some type of aid comes from the government about that soon. And interest rate, okay? We don't know when interest rates are going to go up or down. We're hoping it goes down every time, but even when it does go down and you hear about it, it goes back up. So, and then you got new builders offering crazy incentives, right? They're like offering to buy your interest rate down to 3.9, 4.9, 5.5, and the market rate is an average of 7% right now. So you could get a 6.8, 6.7, depending on your credit, depending on what kind of loan program. It could be 7, it could be a 7.2, just depending on credit and all the other variables with that. So keep in mind, if you do get a house that is worth more with a 4.9 interest rate, which is really good, you're pretty much going to be stuck with that payment, right? Because unless interest rates drop much more. Right now, everybody's on a 7% interest rate, is waiting for a 4% interest rate to come around to do refinances. So that will change the market significantly if we're able. So, keep in mind, the people that do buy at 7%, paying $3,000 a month, refi at 4%, you're going to pay significantly less. If you're at 4.9 right now and rates drop down later on to 4.8, 4.7, your monthly payment is going to be pretty much the same. So you would need a significant rate drop. So just keep that in mind. If you're getting a great deal with interest rates at 4.9 right now, or 3.9, you're pretty much that's your payment. So not thinking of it, rates dropping too much lower. We don't know how low it's going to go and how bad the economy has to get for it to get low. So in a way, we want it low, but not too low to a point that it's hurting too many people, right? Because unfortunately, with the way the market's going, some people are going to be hurt in this situation. But just wanted to go over those factors. Was the property taxes? Be careful, understand that. Understand the HOA and CDDs, right? That's important to know and understand what you're walking into. And insurance, right? Not insurance, I'm sorry. Interest rates. Interest rates, just keep that in mind and understand if you're walking into a 3.9 interest rate, the likelihood of the market turning around to 3.9 anytime soon is not guaranteed. So, but if you're in a 7% interest rate, 7.5, the likelihood of a lower interest rate is definitely on its way, right? We have interest rate cuts coming. The question is if it's worth doing a refi with these rates. You want to refi more closer to better rates, right? These rates right now are not the best rates for a refinance, unless you're in a certain position, right? There's people right now doing refinances at high interest rates because they have 20 years left in their mortgage. They want to reset it back to 30 years so that way they could keep their payment lower because they can't pay that payment. So there's a lot of different reasons why people do refi this time, right? Maybe they need the capital out their property for personal reasons, hopefully investments. But if it's personal, sometimes we can't control what happens. But, a great opportunity is pulling out equity and doing stuff with that equity. You can do a lot. You can invest it. Just got to make sure you're with the right team while you're investing that kind of capital, because you don't want to tie it up to a point that it's stuck somewhere and you can't take it out and it's not performing, not generating, right? So very important to understand all the little details around the factor. But this is just a video about the beginning process, just so you guys understand the property taxes, HOA, CDDs, and the interest rate situation. Stay tuned. I'm going to get you more facts about other parts of the process of buying a home. Take care. Bye-bye.